Now, today's class is basically going to be about fundamental and news analysis. And I'm going to be discussing with you what fundamental analysis is and how to actually use news to analyze the market. Now, the difference between technical analysis and fundamental analysis is that technical analysis is the use of previous price data to understand where price is going to go to. That means you're simply using previous price data to understand where market is heading to. Whereas fundamental analysis is simply the use of economic events or economic data to understand where price is going to go to. Now, some of the economic data that I can use to understand where price is going to is 1. The country's GDP. 2. Inflation rates. 3. Unemployment rate. 4. Interest rates. That means you're simply using these economic data to understand where price is likely to go to. Now, a country's GDP is simply what tells how good or how bad the country's economy is. Inflation rate is simply what tells us how good or how bad people can afford things in the country. For instance, if you can be able to use 100 naira to buy 100 oranges, and after 2 weeks, that 100 naira cannot afford 100 oranges, it simply means that inflation rate have increased and the value of currency has gone. Now, unemployment rate is simply the rate at which people who are meant to be working are not working in the country. If the unemployment rate is high, it is bad for the economy. But if it is low, it is good for the economy. Now, interest rate is simply the rate at which business people or businessmen can go to the bank and borrow money. Now, if the interest rate is high, it will be very difficult or very high for business people to go to the bank and actually borrow money, because if they are borrowing that money, they're going to pay back in high interest, and they wouldn't want to go and borrow that money from bank because they're going to pay high interest. But if the interest rate is low, you're simply going to go and borrow money, hoping that they're going to pay back the money because the interest rate is low. Now, there are news that report all these data in the forex market. I'm going to explain to you those news in this video, and as well show you how you can use those news to determine where price is likely going to go to in the forex market. But before we go into that, I want to ask you a question. Do you think fundamental analysis is more important than technical analysis, or technical analysis is more important as a forex trader? Drop your answer in the comment section. I'm going to respond, or let's interact together. Now, they're basically about different news that report for all of these economic data. That means a particular news is going to report for this one, a particular news is going to report for this one, a particular news is going to report for this one, a particular news is going to report for this one. We're going to look at all those news in this video. Now, we have various news in the market. We have, I'm not discussing only the high impact news. That means news that's likely going to move the market or cause the market to move with high velocity. Now, we have the PPI, we have PMI, we have CPI, we have NFP. Now, we're going to be looking at this news one by one and how this news actually report this data. After we've understood how this news report this data, I'm going to show you how to use this news to trade the market. First, PPI. PPI simply means Producer Price Index. That means this news is actually reporting for how producers are producing goods in the country. That means how are producers, people who are producing goods, how are they producing it? Are they producing it well? Are they producing it bad? This actually reports for inflation rates about how producers are producing in the country. The goods that are being produced in this country, are consumers taking it? Are they selling it? That's what this news is actually, reporting for. The inflation rate about how producers are producing goods in the country. Now we have the PMI, which simply means Purchasing Manager Index. Now, this news reports for how business activity is going on in the country. Is it going well? Is it going bad? This news basically reports how good or how bad business activities are going on in the country. Now, we have the talk about business activity. We have the CPI. Now, the CPI simply measures for the inflation rate about how consumers are consuming goods that are produced in the country. That is, if Nigeria produce made in Nigeria, how are the consumers in Nigeria consuming it in Nigeria? What is the rate at which goods that is being sold today is being sold tomorrow? Consumer price index gives us the inflation rate for how consumers are consuming things in the country. So this is for inflation rates. Now we have the NFP, which simply means non-farm payroll. Now these measures for the employment rate in the country and as well as the unemployment rate in the country. Now this news basically tells us that, okay, 100 persons who are supposed to be working in the country are not working. That means the unemployment rate is very high. And as well, the report can tell us that, okay, 100 persons who are meant to be working are actually working. That means employment rate is good. So this news reports for unemployment rate and employment rate. So these news now are basically what they call high impact news. That means whenever this news are about to be released, it's likely going to affect a country's economy or a country's currency. And whatever affects the country's economy basically affects the country's currency. Now, how to understand this? You can simply see how this news here is reporting for all these things that is here. First, the non-farm payroll reports for unemployment rates, the CPI and PPI report for inflation rates. Now, for us to understand this country's GDP, you simply have to go to maybe economic calendar and understand the country's GDP. Now, interest rate can be announced in a meeting. Maybe the government or federal reserve can just choose to make a meeting and say we're increasing the interest rate today and nothing's going to happen. They're in charge and they know what they're doing. Basically, the interest rate is used to control inflation. That means if the inflation rate is very high, they tend to use interest rate to control and maybe decrease or increase inflation rate in the country so that the economy is going to be very stable. Now, how to understand that now? We want to learn how you can use this PPI news, which are the high impact news markets, to analyze the market. Now, for us to be able to trade or analyze the market using this news, we simply need to understand three things. One is referred to as the previous report. Two, forecast report. Hope it's clear from here. I don't know. I'll have three, actual reports. Now, these three things that is here can help us to see how we can analyze markets by simply understanding this news. Now, for us to be able to trade any of these news, we simply need to understand previous reports, focus reports, and actual reports. Now, the previous report is simply a past report that they gave about a particular, maybe let's for instance say CPI news. CPI news, let's assume today is CPI news, and we had a previous report about CPI news that CPI news maybe this is an example. For example, CPI news is simply maybe the previous report was maybe say 10. That is the previous report I had before, 10. Now the focus report is simply a report that experts or professionals that have analyzed the market and have analyzed and they are predicting that if this report come out like this is going to happen. If this report come out this way, that will happen. Do you understand? Now they can say that okay, we have analyzed everything as an expert, as a professional, we have analyzed everything and say that if the report that's going to come out is above 10, how do you look at it above again? So is it like this? Above over here. If it's above 10, it's going to be good for the economy. That means anything like from 11 to maybe say 15 is going to be good for the economy. But if it's below 10, what am I even doing again? I hope I'm getting this my how do you do that again? So is less than greater than, I don't know again, you know. Well, let me just make this let me recap. Let me just say it, let me make it something I'm going down. Now remember where we stopped. Previous forecasts and actual. Now this how to use this thing to analyze market. Now I explained to you that previous report are simply maybe old report that I gave in the previous month. Now forecast is simply the one that maybe experts and professionals have analyzed market and telling you that if this is come out like this or if this is come out like this, it's going to happen like this. Now the actual is simply what the news is actually reporting at the current time. Now giving for example, say CPI news is reporting is an example. CPI news is reporting and the previous data was actually 10. And now expert and professionals are saying that if the news that is going to the actual news that is going to come out is above 10, it's going to be good for the economy. But if it's below 10, maybe if it's 9, 8, 7, it's going to be bad for the economy. Now they're giving you a hint of what is going to happen in the market, that if the price is above 10, maybe 11, 12, 13, it's going to be good for the economy. But if it's bad, if it's below this might if it's below 10, maybe 9, 8, 7, it's going to be bad for the economy. Now if the news come out and the news is 20, it simply means that it's going to be very good for the economy. If it's maybe 5, it simply means that it's going to be bad for the economy. Now if it's good for the economy, it shows that the strength in that currency. But if it's 5 for the currency, if it's weak for the currency, it simply shows that it is weak for the economy as well, and it's going to affect the currency. I hope you understand. I hope it's clear. Let me just recap it again. I'm actually saying that previous is simply what the old report is. Forecast is what professionals are predicting that is going to happen or how it's going to come out. If it come out like this, it's going to be good. If it come out like that, it's going to be bad. Now, the actual price is simply the news that is going to drop on its own. For instance, if the previous data is 10 and the forecast is saying that if it's above 10, it's going to be good for the economy. But if it's below 10, it's going to be bad for the economy. And if the news eventually come out and it's 20, it means that the news is actually very good for the economy, which shows that there is strength in the country's currency. Now, if the news come out and is below 10 and maybe 5, it means that the news is very bad for the economy and it's going to be very weak for the currency. Now, a weak currency shows that it's going to sell. A strong currency shows that the currency is going to buy. Now, if this report is based on the USD, every currency pair that is attached to USD is going to be stronger than any pair. Let me say USD, CHF. If news is strong, it's going to be a buy for USD CHF. But if the news is weak, it's going to be a sell for USD CHF. So basically, if USD is attached to any currency and this news come out, it's likely going to have a very high impact on that currency or on that currency pair. I hope this is clear. But if you don't understand anything I'm saying, if you don't understand anything I'm saying in this video, you can drop a comment and ask me any question. I'm going to respond to you. Now, the website where you can get all this news, or where you can basically see the real value or the real data that is going to come out for any particular news, is my Forex Factory or my FX book. So these websites are websites where you can likely go and check if there's any news or high impact news in the for any currency that you want to trade. For instance, if you want to trade GBP or USDT, you simply want to go to my Forex Factory to understand if there's any high impact news, which are often indicated by a red bar or a red box. So high impact news always have a red sign attached to it. So whenever you open that Forex Factory and you see any red, it simply means that this is a very high impact news for that particular currency. So if you want to check the news and check it out, you can simply just log on to www.myforexfactory.com or www.myfxbook.com. They are going to actually be seeing the real figures there. I'm using these figures as an example. And then you can simply see this previous, forecast, and actual. They're going to be giving you particular, let me say for instance, USD unemployment rate. These are the figures you've seen previous, you've seen forecast, and you've seen actual. Now, when you open the forecast, you see what experts are saying. If this go like this, it's going to be good. If it go like that, it's going to be bad. Now, for the news to come out above any of these things or anyhow, you can use your head to decipher that, okay, because it came out higher, it's going to be strong. And because it came out weaker, it came out lower, it's going to be weak. And now you'll be projecting weakness for the USD based on the news, or you'll be projecting strongness for the USD based on the news. That's basically how you trade the news in the forex market. Now, if you find this video very interesting, I'd like you to subscribe, drop a comment, and let's interact on the comment section. I'm going to see you in my next video. Peace.